Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. It's been an interesting time since we last spoke. The market is almost exactly where it was 2 weeks ago, but it dipped a little bit, then bounced for a couple days, and today it sold off after the Fed meeting news. But one thing that's been happening with the Dow and the S&P 500 is I see a lot of people on their internet who, are using chart analysis, and you can draw a very simple triangle pattern connecting the highs on the Dow and the lows. Same thing the S&P, and these people are predicting a breakout to the upside, and frankly, it looked like it could have done that a couple of days ago, but they were predicting that would mean it would rally to new highs and just go up all year, and now it's trading down as it could break down, and it possibly now, but I don't really think these patterns mean a whole lot, even though people are focused on them, because when you look at the individual stocks in these markets, and the Dow 30 is a quick way to do it, but there were only a couple Dow stocks that looked like they could rally to me when I was looking at things over this weekend. One of them was Verizon, and it just went up like a day and then completely reversed, and some stocks like GE just seem to be falling every month. So to make a long story short, I don't see a lot of individual stocks or sectors that can drive the market to new highs and then a sustainable rally after that. Gold,
again, has it was in favor for a little bit and now seems to have fallen out again.
Yeah, and the interesting thing about gold is even though it doesn't feel like it, because we've seen the dollar go down since 2017, and it's recently had a rally, which gold is really kind of seemingly ignored. But in reality, there's still a very close negative relationship between the dollar and gold of negative 90, which is almost exact. So gold has still been trading opposite to the dollar over the past, months, even though it hasn't felt that way, because we haven't been seeing really big swings up or down in gold. Gold's been locked in a range between 1360 and really 1300, and it doesn't really feel like much is happening, but it's still trading opposite to the dollar. Now, that's actually good news at this moment for gold, because the U.S. dollar index has had the biggest rally in the course of 12 days that it's had in 2 years, and gold barely dropped at all. And I think that rally is going to lose steam very soon. And typically when the dollar index stops, when a rally ends in it, it tends to drift for 2 or 3 months and roll over. And we're still in a bear market in my book with the U.S. dollar. It's basically just rallied up to resistance, the 200-day moving average. It should, roll over and have a new leg down by the end of the summer, and that's going to be positive for gold. So what I'm trying to conclude from this is that, okay, the dollar has already really had the rally. It's been a big rally. Gold has barely pulled back, even though it did pull back, and people hate the pullbacks, but we're near 1300 now in gold. I think now is a little bit of a time to accumulate gold. You got to be patient though, because I don't think it's going to break 1360 next week and might not do it to the fall. But everything still looks okay. We're still in this boring trading range, but we've probably seen the extent of the dollar rally impact on the price of gold. And today, Gold actually rallied after the Fed minutes, even though it sold off the last hour of trading. And the Fed, I don't know, was more dovish than people expected, supposedly. I don't really understand why they thought the Fed was going to be hawkish when they're still poised to raise interest rates next month. But one of these Fed meetings is going to be a turning point. It's not this one where people are going to say, okay, there's really not going to be more rate hikes to come, and they're just going to pile into gold. I can't, predict the exact day that's going to happen. So I'm happy to hold my gold positions. And I think gold is actually a necessity in these markets, because the stock market is down year to date, just barely, but bonds are down too. The TLT ETF is down almost 4% for the year. With bonds and stocks both down for the year, people are losing money, almost everyone in the United States, because that's all they invest in. But gold is up year to date, and gold stocks are too. For the most part, GDX is down just a little bit, but Newmont, Royal Gold, Franco-Nevada, many of the leading mining stocks are up substantially, many cases 10 to 15%. The GDX has really been weighed down by the action of Barrick, which has been lagging and down for the year. So I really think, gold stocks as a whole are a very positive place to invest and a way to diversify, because the dollar's in a bear market, and the dollar's had a rally, so gold's pulled back, and dips are the time to buy, when there's something that you believe in and is performing better than the broad market is.
We'll have more with Mike Swanson right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Mike Swanson. Mike, what's your feeling on uranium right now?
Well, I think, uranium's fairly interesting. In fact, the uranium stock ETF, much like the gold stocks, is actually even for the year, whereas the rest of the stock market, as I said, is pretty much down. So that's a positive. I think they're, interesting enough though, Cameco, which is the biggest uranium miner in the world, is up almost 20% this year. So there's lots of great action in the uranium stocks. Same thing is actually happening with most of the copper stocks. Rio Tinto, for example, is up over 10% year to date. So lots of interesting stuff in the commodities and interesting, I think, what we're really headed for in the big picture is some sort of stagflationary environment down the road. I know everyone is predicting huge economic growth, but so far this year that hasn't really been panning out. The New York Times yesterday did a front page story saying that Trump's tax cuts have not materialized in the sense of creating a boom in capital investment spending, which was what people were predicting to fuel GDP growth. The GDP numbers only came in at 2.2%. We're not even gotten above 3%. So growth is much more sluggish than, frankly, I actually expected. When Trump got won, I thought the extra government spending he was going to do and did, and his tax cuts, which he said he was going to do and did, would boost GDP growth by 3%. It hasn't happened, and I'm someone that's willing to admit when something doesn't turn out the way I expect, and then adjust accordingly. So what has happened with investment spending is that last year, corporate investment spending was about 6%. In the first quarter, it's only gone up to 7%. It's very sluggish, barely increased. But what has increased, is the stock buybacks. We're seeing record stock buybacks this quarter. I'm looking at today's news stories, and one example of what's going on is the Caesars Gambling Company reported that they've lost $473 million in the first quarter, a staggering loss. But they're going to increase their stock buyback by $500 million. So corporate America is using the tax cuts to buy back stocks. Apple announced a massive buyback in the face of sluggish Apple sales, and the stock gapped up on that news. And that's what's, keeping the stock market from falling more than it is. But this isn't creating huge economic growth. So I think we're poised for a situation where this is going to eventually run out of steam, and we're heading for, I think, a stagflationary environment. And in that case, gold's going to be the place you want to be, and so are commodities such as uranium and copper and so forth. And I think even agriculture at some point, although I'm not quite yet in that game yet, and am worried that agriculture could pull back later with the stock market or be held back because the agriculture ETFs such as DBA and RGA are trading with a very close correlation to the Dow and the S&P 500, which I don't like. I want things that aren't trading with the Dow and S&P 500 and are trading stronger to invest in, which gold is doing, the mining stocks, and uranium, which you asked about.
We'll have more with Mike Swanson right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Mike Swanson. Mike, what's your position on crude right now?
Well, I'm really agnostic on crude. I'm kind of spooked because the commercial traders in the crude market have a massive short position. That kind of scares me. And we have had a rally though, and this is something I was saying before the oil rally, and the energy stocks have done well. They're also a sector that is outperforming the market over the past couple of weeks. So, but I kind of want to wait and see, how they play out over the next months or so before I might take a position. But if I own them, I'd be happy. But I'm just someone that's a spectator in them right now. Another sector, I'll tell you though, that's also interesting that I don't really have lots of positions in. I don't just tout things just because I own them, but that's the marijuana sector. So the marijuana stocks such as Canopy Growth, the symbol we.to, they've had tremendous runs last year, but they're all consolidating and in a position where they could break out again this spring and take off back up to their highs. So if the market, at some point we do get a rally, even if we break that triangle pattern or fall a little in the May or whatever in the S&P and Dow, we'll probably rally back up, have some sort of bounce back up, and there'll be things that lead that rally whenever it does happen. And it could be the marijuana stocks. If they hold up on a dip in the stock market, they'd be a place worth looking to buy. And, as you know better than I would, There's lots of stuff going on in Canada in regards to changing the marijuana laws to legalize, decriminalize recreational use of marijuana, and these stocks are probably going to run into that event later this summer.
Right. Now, we don't know exactly when they plan to legalize. At first, it was July 1st, then sometime this summer. You know, and we have all these provincial governments who keep screaming, we're not ready. You've known since Justin Trudeau was elected he was going to legalize it. But, of course, the federal government wasn't fast with their legislation outlining how it would work. But they almost have the position, oh my God, there will be riots in the street and babies will be using pot. Well, we're right next door here in Vancouver to Washington State where they've had it for years. And all my relatives and friends there, I said, any difference since pot was legalized? They said, if anything, it's more civilized than it ever was. So
yeah, if people are smoking dope in their house, they're less likely to go outside and cause trouble.
Exactly, impaired driving down and so on. Plus, you know, so many more medicinal purposes being found for it. And you can separate the pain reduction part of pot from the chemicals that make you high as well. So, you know, there's so many purposes that make it good. And I've even talked to beat cops who said, I'd much rather have pot legal than alcohol. You know, very few people smoke a joint than go outside and have a fight.
Yeah, that's the truth. Well, one way to look at the uncertainty with changing the laws in Canada and how it's actually going to happen or what will or will not happen, you know, we can't predict the future, but one way maybe to think about that is the tax cuts that happened in the United States. Last year, they got put off too, and it wasn't sure when they were going to happen. But what happened in the stock market was people just said, well, they're going to happen one day, so I'm going to buy anyway. And it became, when they would kick the can down the road of when they're going to come, it almost became an excuse just to keep buying, you know, and then when the tax cuts eventually materialized in December, there was the rally up into the end of January, kind of a final rush. So it could be the same thing happens with the laws in Canada in regards to this. It could be that the longer they put the laws off, it just gives people more an excuse to buy into it. And then when the news does come out, there's initial excitement for a couple of weeks, and then who knows what happens after that with the stocks.
Yeah, I don't know why the governments in Canada don't want it, because everywhere where it's been made legal, the tax revenue has usually been double what they expected to make. So why not take the money out of the hands of organized crime and put it into the hands of the people?
Yeah, I wish they would legalize it where I live too. There's lots of tobacco farmers, or they were tobacco farmers in my area, and they went under when the government stopped supporting the tobacco market. So there's all kinds of land everywhere where people could grow tobacco where I live, or hemp, or something. And it's probably like that all over the place.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.